Hello, everyone. Today is Friday, September 8th. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 697. We are back. We missed last week. Sorry for those of you who are looking for our show. It was a rare miss for us. For those long-time listeners here, you know we rarely miss a show, but it was a vacation week for me, or really a moving week for me, less so a vacation. And most of this week, to be quite frank, I was a little bit distracted and not tuned in, dialed in as much as I usually am with markets. So this video here is as much of a catch up for me on all the action that went on this week as it is for anyone else. And let's get into it. So we've got the charts here. We're going to fast track it right into the numbers. We're going to take a look at everything that went on this week and recap a bit from last week as well. So this week, you can see, follow my mouse here on the right-hand side, we've got red across the board. Russell 2000, hardest hit here, 3.6%. Definitely the underperformer here. Dow Jones, best house in the neighborhood, but still down almost 1%, and S&P and Nasdaq basically in between. Now, the one impressive stat here is really the volatility index. If we're looking at the VIX, we're below 14 going into the weekend. So even though we did see some turbulence this week, we gave up some gains, there's a little bit of range and volatility out there, we still see the VIX under 14, quite complacent here going into September. Nasdaq vol is certainly higher. It's got a pretty good spread premium versus the S&P right now. It's almost up at 20, just below it, 19.28. Both volatility indices were up almost 1 point this week. If we look here at our 5-day intraday action here, you can see basically started the week on a positive note and then just essentially trended down throughout the week. Now, if we take a look at sectors here, two were in the green. So energy and utilities were the only place you could be this week to make some money, and that's a little bit of an exaggeration. Of course, there are individual stocks that could outperform in the losing sectors, but on aggregate here, energy, utilities, they were the top performers. Communication services was down just slightly, 0.22%. On the downside, XLI industrials 3% to the downside, followed by materials and technology were the laggards this week. And if we look at our 1 month numbers now, you can see that most indices, or most sectors, I should say, are in the red. The only things over the past month that are showing positive returns are energy, XLE up 4%, and technology up still 2.79%, even though it gave back a good chunk this week. If we take a look at our trade risk smart trend filters, and for you TC2000 users, for you TradingView users, this indicator is available. It really just helps smooth out the noise and cleanly see who's in control of these markets. And if we take a look here at our sector board, you can see a lot more from 2 weeks ago when we last recorded our video. A lot more sectors in these downtrends now, or at least are in these neutral kind of turbulent states. So if you look at technology, for instance, printing yellow dots, XLC, communication, printing yellow, right? XLY, XLRE. The only thing that's in a confirmed positive daily uptrend right now is energy. Every other sector is either bearish or printing kind of neutral indecision right here on the daily time frame. So notable weakness, more kind of expansion to the downside or uncertainty over these past 2 weeks. Now, speaking of that, if we take a look at market breadth here, so bottom of the chart is our 52-week high versus 52-week low ratio. Basically here, when you're seeing these expansionary sort of red, histogram lines here, that is a bearish outlook. It's telling you that there are more stocks hitting 52-week lows right now than there are stocks making 52-week highs. That ratio, to me, is an important measure of sort of intermediate term strength in the market or weakness. And in this case, it's weakness. We're not quite seeing, so if you were to do some simple TA here, really just kind of eyeball it, right? You're not seeing a increase here. You're not seeing a linear exponential increase in the number of stocks hitting 52-week lows. So at least that is semi-constructive, but you're certainly still seeing more stocks hitting 52-week lows over the past 2 weeks weeks of trading. So that ratio really hasn't changed yet. If we're looking at percentage of stocks over a 200 SMA, we're below half. If you're looking at stocks below above a 50 SMA, you're just over a quarter of stocks. So you can see clearly a little bit more bearish behavior over these past couple of weeks. If we take a look at IBD's top 10 here, this is their IBD 50 list, and we're looking at the top 10. Shout out to IBD because they are a sponsor of our show, Investors Business Daily. You can get access to their digital subscription with a link in the description of this video. Support the show, support our sponsor. And so if we take a look at the performance here, you can see it was a pretty mixed race. DraftKings back at the top of the list here, up 7.5%, followed by Celsius and Workday, also printing decent returns there. On the downside, though, we had a handful of stocks here. ACLS down 8.5%, DLO, FTAI all down 3% or more. So kind of a mixed race here for the IBD 50 list. On the 1 month numbers, though, you can see quite strong performance, good relative strength leaders there, generally speaking, over the past several months. Now, if we take a look at commodities here, you can see oil continues to run away to the upside. This is one of the continuations and trends we're going to talk about and look at the charts in a little bit. But oil continues to perform well, hence the energy outperformance that we saw earlier out of that XLE. We also see continuation out of the dollar index, which was up almost 1% this week and continues up in a straight line as well. DBA, our agriculture ETF, doing well. Everything else closed in the red. Gold, copper, natural gas, silver, all negative here, 1 to 5%. You can see if we look at our smart trend filters on some of our commodities on these daily time frames, you're starting to get rollovers here in silver, copper, right? Natural gas. Some of these have rolled over, a little while ago, but are continuing that downtrend here. Oil is really standing by itself. DBA standing a little bit by itself as well. Gold kind of figuring things out still. Stronger dollar, always putting pressure, or I shouldn't say always, typically putting pressure. We see those correlations kind of inverse onto the commodity scene, and the dollar has been very, very strong. Now, interest rates here. So if we take a look at our yields across maturities, you can see things were up generally speaking this week. So we saw interest rates up. We saw the MOVE index up. 10-year yield, right, starting to push out and break to new highs relative to a year ago and new cycle highs. This is all things that we've been talking about for many weeks now, or many months, frankly, as risk factors to this market and as sort of a bearish pressure on equities, specifically tech. Again, it took some time for tech to really kind of, warm up to potentially, or I should say, cool off to these higher yields. Maybe we're in the midst of that process now, of them kind of catching up and falling back in line with one another. But really, kind of the story is still out. We got mixed, certainly, opinions here on yields and their impact and their future outlook. So those are the numbers there at a high level. Let's take a look at some of the price action here. We're going to go back to our S&P 500 weekly board here. And so we're looking at kind of the same chart that we've been looking at for quite some time, same horizontal levels annotated across our charts. And this is really, meant to be the big key influential levels to be paying attention to here as traders and investors in this market. And when I look at the S&P 500, not a lot has changed. So last week we didn't do a video, but the S&P was up 2.5%. Now, my thoughts last week would have basically been, hey, congratulations, bulls, getting back up towards the top end of the range. But we haven't really changed structure here. We haven't taken out the prior cycle highs in July. We haven't taken out the prior lows from 3 weeks ago in August. We're still above 4,300. We're still below 4,600. So to me, there's really still just a lot of sideways chop in here. And we don't really have any new direction. Bulls clearly trying to put in, a higher low here around, this 43.40, right? 43.35 or so. This is the higher low attempt that's in progress right now. And when we look at the action this week, what we see is essentially an inside week. We had a nice positive 2.5% up week last week. And now this week was really digestion. We sat here inside all of last week's range and we closed down 1.25%. So right now we're in the middle of a range. We haven't really broken structure in either direction. Bulls are still trying to hold this intermediate term trend up. And so for me, be conscious of the chop and be conscious of kind of the whipsaw action. From an intermediate term basis, 4,300 is the big level I'd be still paying attention to. If you want to manage risk a little tighter, you can look at last week's lows, Friday's lows around 4,335 as sort of your line in the sand or risk factor here. But to really get some good momentum in this market, got to break out above 4,600, and still I don't quite see that happening based on some of the market breadth things that we talked about, right? Some of the yields that we see to the upside, until we see some of these ratios, until we see some of these other sectors starting to go neutral, enter uptrends, see some breadth expansion, see more stocks hitting 52-week highs. That's what we're going to get, or what we're going to want to see in order to get a little more excited about a potential breakout, over 4,600, right? So let's see. It can obviously start happening this week. We can see a bid come into this market, some more, strength kind of enter. But those are the clues we're going to be looking for. As it stands right now, I'm still seeing a lot of kind of chop inside those broader ranges. If I take a look at the Nasdaq 100, we've got very similar situation here in the immediate term. We've got another inside week that got printed this week here. So you can see strong week last week, up almost 4%. We spent this week digesting that nice move up. When we go back to a daily chart, you can see that the Qs are trying to hold above the August lows, 356, 357. They're trying to hold above this 370 zone, which were the June highs here, and going all the way back to the February, March, April highs here back in 2022. So there's some, there's some price memory here, and you've got a lot of kind of choppy action occurring. We're not quite back up towards breaking out to new highs. We're not at the lows either. We're kind of in a no man's land situation right around this 372. So I don't have quite a strong opinion on the Qs here as it stands. The Russell 2000 underperformer this week by far. We're back to the lows from August here. This is putting in a more kind of sober look here where, I'm sure a lot of technicians might be looking at this as, some type of, pattern, head and shoulders, or however you'd like to label it. But basically you've got kind of a lower high situation at play. We're not quite back to last week's lows, as I mentioned, but if we start breaking below 182 or so, that would certainly be a new potential breakdown and change in sentiment and character here for this market. As it stands, though, the Russell 2000's down 4 days in a row, a little bit oversold in the short term. You got maybe some positive momentum divergence brewing here. So, just be careful shorting after 4 days down into prior support with some positive divergence. Like, it's not quite exactly a fresh, easy, actionable short, but it's just not a place where we've seen a tremendous amount of strength on the other side either. So that's kind of the way I'm looking at these markets. Generally speaking, chop with a little bit of kind of glass, half empty sort of disposition there, given some of the market internals that I'm seeing. Now, if we take a look at oil is very much in a sort of a different situation here. So if we look at oil, you can see it's been really strong over the past couple of weeks. Frankly, last week, 6.17% to the upside. If you throw on Bollinger Bands here, it's above the upper weekly Bollinger Band. So you can see just how strong it is. Oil typically doesn't get too far extended above its weekly upper Bollinger Band here. And you've got this really textbook kind of continuation pattern that is at play. Last week was the breakout. We resolved out of a lot of this chop here, and we're at new, pretty much would be, year highs, 52-week highs, year and a half highs almost. So it is nice to see the big strength going out here in oil. Energy stocks certainly been the place to be. You've supported that with some volume as well, and you're getting a high and tight consolidation. So a little bit of a tougher chase, of course, but certainly some good action here out of oil. If we take a look at something that's not working so well, and we got silver this week. Let's take off Bollinger Bands. Let's clean up our charts a little bit. And you can see silver silver has been oscillating in just this longer, broader range here. So for most of, the second half of this year, since April, it's been really sideways here between $20 and call it $23. I mean, that's a big range for a commodity. It's 11.5%. And you can see we're getting back to the lower end of the range here. We're down 7 days in a row. 1, 2, 3, 4, 5, 6, 7 days in a row. And we're coming back to these prior levels where buyers have showed up around $20.50 in the SLV ETF. So, different situation here, total polar opposite of oil. Meanwhile, as we talked about, dollar index continues to go up. Take a look at this weekly chart here of the dollar index. Remember, the dollar was so strong in 2022, right? It was the, just total melt up. Then nobody wanted dollars here in the second half, fourth quarter of 2022. We corrected hard, and then we entered into this sideways sort of grind out. Traders oscillate sideways up and down until this past 3-4 weeks ago at the end of August, or beginning of August, I should say, we started to finally break above this 7-month year-to-date range, and it's been nothing but up since. We've printed now 7 weeks up in a row for the dollar index here, 8 weeks a row in the dollar index, and we're certainly looking, we're still a ways away, but certainly on pace to get back up towards those 2022 highs. So very impressive strength out of there. We talked about oil. Gold, let's take a look at that here. Gold, you can see not quite as weak as silver, but certainly giving up some gains here over the past 6 or so days. Got as high as about 181 until it started to pull back here, and it's kind of just in an interesting situation, interesting spot. Talked about the gold longs that we put on here a few videos ago. Right around here, I still have that position in gold. Did a little bit of rebalance trimming up here, but actually, no, it wasn't up here. It was on this day here on the Tuesday, the 8/29. But generally speaking, I still have my position here in GLD, still just waiting to see how this acts. It's a slower, not an active, hardcore trading strategy that this position is in, but I still have a piece of it, still like the potential here, and like the fact that it held this 175, kind of the line in the sand there that I'd be paying attention to. But it's in a little bit of a tricky kind of decision type of spot, the way I'm looking at it. So that is really the commodity wrap up there. A couple of other bigger stories. If we take a look at Apple here, certainly getting a lot of attention. Apple this week down 5.95%. I wonder, that's got to be one of the biggest down weeks we've seen in Apple in quite some time. Let's take a look here at our rolling returns layout. If we go to the weekly chart here, I mean, for 2023, it's going to be the second worst week of performance here for Apple. And the more interesting story for Apple here, as I look at the just general structure, is whether or not now we just got our lower high in place here on a more kind of structural or maybe cyclical, trend reversal, so to speak, right? So if we topped out and we had our high up here around almost 200, 197, recall that high was, a new all-time high. And then, of course, as earnings hit, we saw Apple kind of fall back below its prior all-time highs. Then it made an attempt to kind of get back above it, and now it's kind of back below it, right? And if we look at the volume profile here, look at these heaviest volume, quote unquote distribution days occurring on down days, and we're getting a potential lower high and lower lows pattern emerging here. And so this clearly is going to be bearish action for the Nasdaq 100. And the heavy weighting that Apple has, and a lot of this gap down kind of abrupt action is certainly not what you want to see. So I don't want to call it out forever here. It's tough to reverse these longer term trends, secular trends that are in place, but Apple's certainly in an interesting situation right now, the way I'm looking at it. If we take a look at some of the other hardest hit stocks this week, if it's really the semiconductors is look no further, so to speak. Wolf, right? Wolf Speed, semiconductors, SWKS down 9% this week. MKSI down 7% this week. Nvidia was down 7.6% this week, right? And this is clearly one of the biggest, kind of market leaders at this point, story-driven stocks for good reason, but, down 6% this week. 6% doesn't look like it's doing anything in terms of violating any type of structure. It's still above all the key moving averages. It's still trading really close to its all-time highs. This week was low volume here for Nvidia on a, just a volume adjusted basis, but you can clearly see that we're losing some of these highs here. We're failing to break out. We're failing to hold these breakout levels. So be interesting to see if some of these leaders here start to change course and head south. Don't know yet. We'll need to see. Not going to predict it, but certainly observing the short-term pullback and technical damage that we've seen in a few of these names. So that to me is kind of everything that I had planned, and I didn't have a whole lot planned this week. I'll be back in full swing next week. I'll be back at it, kind of tapped into markets again. It's like I said at the top of the video, I've been a little MIA this week. So hopefully everybody's had a good trading week out there, and I'd love to know what I missed. Leave a comment below. Let me know what you're looking at this week, what you think is most important going into the second week of September. I'd love to hear your thoughts in the comments section. And as always, thank you so much for tuning in every Friday, just about every Friday. You can rely on some objective market analysis. That is the goal. And I want to wish everybody a great weekend, and we'll see you back here next week. Take care.